Welcome to the Cashflow Academy Podcast. I'm your host, Andy Tanner. This is where we make investing simple. We're going to make it simple today. Our topic is going to be the rise of gold and, where's the top? And boy, is it taken off. So I'm joined by Halliday, Davidson. These guys are going to weigh in. Last time we talked about gold, it had such a surge. I was thinking about selling. Corey said, not yet, Andy, not yet. So I got to thank you for that. Well, have you changed your tune? We'll see what their plans are with it. But it's good stuff. So that'll be our topic. Make sure you like and subscribe and hit your notification bell so you know when new episodes release. Share with your friends. And above all, get some free resources at yourinvestingclass.com. Right now, it's not a class. It's a free ebook. Life-changing stuff. I can tell you with total confidence when you go there, you read that material and you'll say, wow, my life is going to be different moving forward. My habits will change. There's some really important wealth building habits in there that'll bless your family and bless your life. And that's why we give that away for free. Very valuable, good stuff. Don't pass up on that offer for sure. Get to yourinvestingclass.com. And with that, let's start with Corey this time. Quick introduction, please.
Yeah, so I got started in the markets a few decades ago. I worked at Wall Street, got a Series 7 license, eventually a Series 4, which is the head of option trading. And the thing I love about option trading when we're talking about something like gold is it has no income. But with options, we can create a stream of income on the gold that we own. So there's some fun things in the options market, but just a passion for markets, a passion for learning, and love doing the podcast.
Awesome stuff. That reminds me, I haven't looked at those in a while. I used to sell puts on SLV and GLD all the time.
Oh, yeah.
So when it would take a dip,
you'd acquire,
I'd acquire some, and I know you do the same. So Noah, a little introduction.
Wow, I am a trader and investor. I've been at this for 28 years now, and I get to be here today because once upon a time I had people to look up to that I decided I want to be like that guy, and that kind of changed my pattern of thinking, gave me some examples to follow. I found great mentors and great educators, and I own gold because I'm friends with Andy, and Andy taught me about the value of buying things like gold and silver. And of course, I've learned how to trade around the ETFs and things and the gold miners, and there's a lot of interesting things you can do when you understand an asset.
There's at the risk of being repetitive, but whenever we talk about gold, I tell these stories. I don't know. My grandfather was a gold bug, and it was pretty cool. This Christmas, my older son got a special gift from my mother. My grandfather ran a makeshift smelter in his backyard, believe it or not. And so there was always, slag, and it looks like lava. It's just hot metal and slag and volcanic stuff. And that's probably why I'm so goofy as OSHA. There's probably more acid and ammonia and mercury and all kinds of stuff.
What you're breathing in.
Oh, it's unbelievable light show. Yeah. It was an electro smelter. So not only had the liquid metal, it had the carbon rods and the lightning and the smoke. And
oh, wow.
Incredible. So I always had gold and silver in my hands as a young kid. I always knew how weighty gold was and how beautiful the silver was. And he'd have big old silver bars. Gold were tinier buttons. But my grandfather was from Germany. He came over when he was 6 years old, and he knew the Weimar Republic. He was part of that stuff, and he was very close to the wheelbarrows full of cash, and someone would dump the cash out and steal the wheelbarrow type stories, right? He hated it. I was born in 1968, so I'm sitting on his knee, 3 years old. Some of my earliest memories are sitting on his knee on his lawn chair in his backyard, and him teaching me what he used to call the evil bankers is what he called them, but it was really Federal Reserve banks. Yep. And he'd say, there's going to be inflation, and he was a gold bug. So I had that when I was young, 3 years old. It's always been in my veins. So anyway, at Christmas time, my mom pulls out of nowhere and gives it to my son because she knows how much my sons love this. And to my older son, there was an ounce of gold made into a medallion that he had smelted himself in his smelter.
No way.
From Grandpa. I don't know how many she's got, but she gave one to my boy, and he got emotional because of what it meant to him, that silver. Anyway.
That's awesome.
Anyway, when you look at the ways to invest, people poo-poo the ETF all the time, and it's just paper, it's worthless, and that really kills me, because in one breath they say, well, cash is trash because it's not backed by anything. Well, what's the GLD backed by? It's the closest thing you have to something that's backed by gold.
It's backed by theoretical gold.
Yeah, exactly, right? Well, I don't know. Rob Pisani.
Has anybody seen the gold?
What's his name? Rob Pisani?
Bob Pisani.
Yeah. They blindfolded him, took him into the vault. Yeah. Some dude's like, look at that serial number. That's off. It's conspiracy. But the thing that is you can cash flow it, as you mentioned.
Yeah.
And you can have the asset tied to it. It's extremely liquid.
Oh, yeah.
And people are like, well, I can't go turn it in for gold. Well, yeah, but you can turn it in for cash. And that's what people pay rent with right now.
Yeah.
And so you can get cash flow. Like if I own a rental property, I want cash from the rental property.
It's the cash flow that matters.
You're not even cash flow, and it spends the same to me.
And that's a good concept of, you don't really sit there and worry about where your rental property is valued at today. You're not checking it every day on Zillow and going, is it up or down today? You're worried about the cash flow and having the renters in there and so on. Gold, that's one of the arguments against gold and silver, is they're non-productive assets, right?
Unless
there
you
is
sell
no
options around them.
Exactly, but there's no revenues, there's no earnings. It's just a hunk of metal. Yeah. And we look at it as a hedge. It's a hedge against potential risks, against other things that could happen. It's not a great asset by itself. If you look at it historically, it's just kind of, will it just barely outpace inflation and so on, versus stocks, which do a lot better. So we've got to look at it in that vein of, okay, typically it doesn't do as well as the S&P 500. But if I look at it from the standpoint of knowing how to utilize options against it, now I can create some income off of it. So now it works as a hedge, but then I also have the ability, and it's conservative. You don't need to be selling options that are generating massive amounts of premium. But I kind of look at it as a comparison to treasuries. If I could get, like right now, a 10-year bond yielding 4 or 5%. If I could get 4 or 5%, on my gold and silver for the year, then I love that investment because it's a nice hedge against potential risks and things. Plus, I generate a little bit of income, and I'm not getting zero off of it.
Well, Noah and I would do this, and I haven't done it as recently, so I should get back into this because I haven't done this in a while, is I would sell puts on the SLV out of the money, waiting for it to dip. So you get cash, you get cash, you get cash, you get cash. You're building up this cash, and finally it dips. Okay, great, buy it, sell it, take the cash, buy real silver, and your silver just funded itself, right? Yep. You used to do some of that.
Yeah, I used to go, then I'd go to the coin shop down the street and buy silver rounds.
I'll give a shout out to a couple of places. I go to Monarch Coin. That's where I go locally to get it. And also goldandsilver.com. Mike Maloney's a friend.
It's a good mindset to think, if I have 100 shares of silver versus 100 coins sitting in front of me, if I sell an option, I don't even have to own the coins yet. I can make a promise, and it'll pay me a premium enough to buy one coin.
Yes.
And if I do that every single month, I'd have 12 coins just by making promises to own 100 more at a cheaper price.
Yes.
Yeah.
And then worst case scenario, if the value of the asset drops and you get a sign, now you own it, and you can turn around and write a cover call
and bring in another coin.
Premium.
Yeah. But it's a good mindset.
Buffett, now we'll talk about miners, major miners, and junior miners, but Buffett did a weird thing years ago. He bought some Barrick.
Yeah.
And everyone's like, he hates gold. Wow. And so we were sitting there trying to get in his head and like, well, why would he buy gold? And it occurred to me for the first time that why would you want an ounce of gold when you could have a share of the entire frickin' mine and a share of every piece of gold that come out of there forever, right? Yeah. And now if gold went up, you're producing something. So if the world went to hell in a handbasket and everyone wants gold, I own the gold mine.
Yeah.
I literally own a gold mine, literally. And I thought to myself, I would rather be a producer of gold like anything else than a consumer of gold.
Right.
So this summer or this fall, we went with my kid out to the copper mine on a school field trip.
By the way, people need to know the copper mine. Rio Tinto bought a mine in Utah called Kennecott Copper. It is the largest open. I mean, they literally moved mountains. Literally moved mountains. You can see it from space.
So the tour guide was giving us a nice little rundown on like how much ore they pull out and process, and this was an interesting fact. They pull enough gold out of that.
Pays for everything.
That it pays for their entire operation.
Absolutely true.
And so I pull up the stock Rio Tinto, and I'm looking at it on my phone.
Great dividend, by the way.
And I'm like, oh, it pays a nice little dividend. And I started looking at the option premiums on it. And the stock, I mean, it gaps because it's traded. It's an ADR, right?
It is.
International.
So
trades.
it's got a bit of a gapping personality, but it pays a dividend and the premiums on it. And so I was just kind of sitting there thinking through the math. I'm like, yeah, that's a pretty decent little asset to own.
Yeah.
Because it can income produce, whereas like, again, going and buying, the gold round, that's like a hedge against inflation.
Yeah.
Rio Tinto, they're really into steel and iron. Mm-hmm. That's their biggest one. Kennecott. The reason I know about Kennecott, when I was a kid, I worked at the smelter. So after I had my grandpa's smelter filling my lungs and brain with toxic stuff, there wasn't enough arsenic there. So I went out to the smelter.
To get more.
Oh, I got stories out there. That's a nasty freaking place. But it was interesting because I would go into the smelter and watch the copper plates. They're massive. I mean, they're hundreds of pounds. And, they put the water on them and cool them off, and then they put them on a conveyor. And they look like a big plate about this big, this high, with little lips on the side and to hold it up like a T.
Yeah. Incredible
operation, massive amounts of copper. But the guy told me, he says, yeah, they pull enough gold out of here that everything else is gravy.
Yep.
Everything
That's
else
wild.
is. So when we come back from break, what we're going to do is we're going to talk about, so we've talked about gold as a hedge. That's your physical. You got to have some gold in the safe, right? That's your physical insurance policy. It's not designed to cash flow. It's not designed for capital gain. It's designed to have something if the dollar goes kaput. That's what that's for. You've got your ETF, which is designed for cash flow exposure. So you have exposure to gold, but it's not like holding it in your hand. Let's not pretend that it's the same thing, because it's not. But you do get a cash flow that way. And then the third way is either with miners or junior miners. Some of them pay a dividend, and you've got your covered call writing, and you're a producer of gold owning a gold mine, which is an interesting take of a way to own gold production.
Yeah, and those symbols are GDX or GDXJ. So GDX is the big mining companies like Newmont and Barrick and so on. And then GDXJ are the little tiny junior miners. Yep.
So when we come back, we're going to have Corey and Noah tell us what get out their crystal balls and tell me whether or not I should sell my gold yet. I was going to sell it, and Corey said, "Don't sell your gold, man." So I didn't. And I'm glad, because it went up quite a bit since then. So that was nod to Corey, because I thought there's no way that thing's going to pull back, and but it didn't. So when we come back, we'll talk more about gold.
To be here at this live event just brings it all together, and I've just gained so much more confidence just being here. Love the guys, love the program. Best education, not just in stocks, just financial education, hands down. The most phenomenal team of teachers. They are genuine, humble, and full of integrity. They're real, and they absolutely make you feel like that they care. They're going to be there every step of the way, and they're just amazing. That's been my experience with them.
Welcome back to the Cashflow Academy Podcast. Andy Tanner here. I'm your host. This is where we do our best to make stuff simple, make investing simple. I'm here with Noah Davidson, Corey Halliday. We're talking about gold, and there's a lot going on. I interviewed one of the sharpest, just a sharp lady, man, Judy Shelton, and she was so stateswoman-like. I mean, it reminded me of going back in time where you had these people who really cared about the country. I thought, man, she should run for president. It was my thought. And Trump nominated her for a Fed chair, a chair on the Fed or some on the board. And Democrats shot her down because they didn't like her. I thought she was phenomenal, but she wrote a book called Good as Gold, and she really, talk about understanding monetary policy. And I loved it because she actually corrected me a couple times very gently in the podcast for Zolandi, and she changed my thinking. So it was a great episode. Check it out, Judy Shelton. Way sharp. I mean, one of the sharpest people we've had on the podcast for sure. So Noah, a couple things. What do you see as a technical analyst when you look at the gold chart right now? I mean, we've had resistance at 1,000 that turned into support. Then we blew through. We had resistance, hit our head on 2,000 multiple times as resistance. Yeah. Now it's blown through there. I thought it'd come back and test it as support. What do you see technically?
Well, it's got a very strong trend, and 3,000 is the new 2,000. Yeah, and I remember saying, is gold going to break 2,000? Yeah. I don't know. Is it? Well,
knocking on the door.
It's right up there, and I would say technically it's overextended, and that ceiling might hold, but it'll eventually break regardless. And so if you got to pull back off these highs, it's probably a buy the dip type scenario. I think about it through long term, which way is the value of the dollar going against gold? And you know that's kind of a one-way street. That what are they going to choose? Austerity, or are they going to continue to print? They're going to print. So what are they going to try?
So you've just touched on the big dilemma is, there's 4 pillars of investing. There's fundamental analysis, technical analysis, positioning for cash flow, and managing risk on sudden change. Those are the 4 things in every asset class that you got to have. So you've just touched upon something really interesting is you might look at a chart and see exhaustion. You might see a rising wedge, or still up, still strong trend, but maybe it's a rising wedge where it's, the rocket boosters are being released and running out of fuel there. And then you look at it fundamentally, and you, like you just did, and said, what are they going to print? Yeah, they're going to print. They're going to avoid recessions and depressions. So that kind of, do you believe more in the chart or more in your fundamentals? Boy, that's a great question. Isn't that a nice one for Noah? Like if you know Noah, that was underhanded. That was an awful question to ask.
Well, choose which child you like the most.
Yeah, come on, Noah. He loves technicals more.
Well,
he loves the technicals more.
Here's what I love about the technicals. You can accumulate the asset over time, and it's a slow and steady wins the race. But I also, that's like a base hit. Yeah, cool. Yeah, got a base hit. But what's really cool? A triple.
Oh, geez.
So if I can spot the trend, identify the technicals, and I look for asymmetrical risk reward using options, I can create leverage on top of an asset like the GLD.
Yeah.
And they have options that are liquid, and you can construct debit spreads or butterflies or things that take a small amount of capital. Yeah. Where if I'm wrong, the risk is finite, but if I'm right, woohoo!
To understand that discussion, you have to understand that gold can do 3 things. It can act as a hedge. And if that's all you want it to do, then you'll be poo-pooing all the cash flow strategies. Well, that's it's all paper, blah, blah, blah. Well, the cash spend's just as real.
Yeah.
What you're talking about is really a capital gain play with a butterfly.
Well,
and you're talking about cash flow. With
you get really clever. You sell a credit spread to pay for a debit spread.
Yeah.
And so you got a cash flow
little risk
strategy.
Reversal.
Yeah, something along those lines.
Yeah. So that wasn't an answer, but that's fine.
That was a good politician move.
He went right.
I'm going to give you.
What he did? He went away from fundamentals and technicals and went to cash flow. Yeah. What you could do is you could position.
Well, but two sides of the same coin, really. Because what's driving the technicals? There is a fundamental underlying policy.
For sure.
It's why am I interested in gold? Well, because they're going to print. When am I going to try and time? Trying to time it can be a fool's errand. But if you're a good technician, you can get it. Yeah, and you have to have risk management. You have to understand position sizing. You have to understand things like stop loss, or again how you're structuring a trade. But you can get an edge, and that's what I love about technical analysis. Is I get it wrong, but you know what? Sometimes I get it right.
There you go. And you talked about the lopsidedness of the risk. That's where you get ahead, is the lopsidedness of the position. All right, Corey. All right. 3,000. Ceiling. Time to sell.
We're at 3,000.
Can I sell calls?
I'm going to say this. Yeah, you can sell calls for sure. And new capital to put to work I would love the gold miners here versus the metal. The reason is gold miners, first of all, have lagged dramatically, but it's a simple equation of what is their expenses and what's their income and, the differential. And so if you think about a gold miner, their biggest expenses are all of the energy and things like that, which oil prices are not super high. Their expenses are not going up dramatically, yet the price has risen quite dramatically. So the profit margins for gold mining companies coming up should be quite nice. And they'll know down to the dollar. If you listen in on their conference calls, they'll say, hey, it cost us $1,500 to pull an ounce of gold out. Well, now if it's priced at $3,000, they're making $1,500 of profit margin versus when it was at $2,300 and they're only making, $800 of profit margin. So I really like new capital. I like the gold miner setup right here, right now.
Junior miners or Newmont?
Yeah, I would say a mix. If you got the capital for it, do some of both. If I'm playing the junior miners, I like GDXJ. If I'm playing the big miners, then I like being more selective, going with an AEM or an NEM or a GOLD, or
buy it outright or sell puts to acquire on.
Yeah, I think you can sell puts still and kind of play that get paid to get in. The premiums, the liquidity, all of that's great with those big miners. The junior miners, not so much. So that's why I like the ETF, GDXJ, if you want to play the miners.
Why did Newmont blow up before Barrick? Are they just a better company?
Yeah, I mean, Barrick, so it could be a kind of a U.S. versus Canada type of situation, not to get into the politics too much, but when you look at GOLD, what it's made up of, that stock symbol, that's Barrick. But they also bought out Goldcorp, which was symbol GG. Now, those are the two biggest mining operations in Canada. So it's big time Canada. Newmont is pretty much all U.S. So I think Newmont was more of kind of a beneficiary of the U.S. outperformance recently, and some of that plays a part. But if you like, I actually own some of both. So I think you primarily own Newmont, which is a good call because
I started with the Barrick and I sold the Barrick and traded it to Newmont.
Well, that's worked out for you. Yeah.
Well, I actually sold the Barrick at a bit of a loss, to tell you the truth.
Did you?
Yeah, a bit of a loss.
But that's worked out.
But I thought, if one of them's going to pop, it's going to be Newmont. So I lost a little bit of money on the sale, but Newmont.
And I think the premiums are a little better in Newmont. So it's kind of a, they're very similar though.
I think the dividend is different.
Yeah, a little bit different between the two.
Yeah, for sure.
So that's my take on the miners, new capital. On the metal itself, and I told you, no, don't sell yet. Don't sell yet.
Yeah.
Here's what I would envision. Gold and silver are their own asset class, like stocks are their own asset class and like real estate and so forth. And traditionally, as one of the commodity markets, the best places to take profits are when you least want to, which is when everyone's clamoring, when it's all over, when MC Hammer is on TV selling gold, like that's where you want to be selling. And if you go back to 2011, silver just skyrocketed, gold just skyrocketed, and everyone was dying to get in.
Remember Cash for Gold?
42.
Yeah.
Cash for Gold.
Yeah. But that's the kind of euphoria. So if you're looking to dump your metal, I still say that when you get into that type of euphoria, you ring the register with
I would never sell all my gold. I want to have that asset class.
But if you have that amount that you want to unload, you're like, hey, I bought it. It was more of a trade type of thing, but you're kind of holding as an investment and cash flowing. Watch for that big boom. And now on the chart, we call it a parabolic curve, right? Where the trend goes from sustainable to unsustainable and just vertically. And it'll knock your socks off. It'll go from 3,000 to 3,800 in a flash. It'll happen quickly. It'll happen over the process of a few months, but it'll happen quickly and wildly.
Interesting thing I've never thought of.
Yeah.
You sell some naked calls that are backed by a portion of your metal.
Yeah.
Because if you think about it, if you got in trouble, the metal's going up anyway.
Yeah.
That's kind of so it would be naked in the account, but covered because you owned the money.
Covered because you actually have the asset.
If you felt it was a pullback, but you thought, I want to sell, like let's say sell calls at above resistance, just above 3,000.
Yeah.
That's kind of an interesting.
Yeah, and it's still a covered call. I mean, it's sort of
covered,
like, think
you're
of it
not
like
covered.
selling a call on Apple, and instead of having the Apple in your account, you have the stock share at home.
Certificate at home.
Yeah, so you're still covered.
Yeah.
And it would be the same concept.
I mean,
the problem with that is now you're selling covered calls on what you want to be your hedge. So that would be the only,
The other problem is, though, is the problem with doing it that way is you got a capital gain.
Yeah.
And you don't want to have a capital gain. If you're in your stocks and you have active trader status, then it's different. But it's kind of weird how all those taxes you got to figure it in.
Give me the mark to market.
Yeah.
There you go. There you have it.
Yep.
Okay, so that was a non-answer. Well, it was kind of an
answer.
answer.
No, that was a good answer. I said buy the miners.
Buy the miners.
Yeah.
When everything is euphoric.
Yeah.
Which I thought was euphoric 6 months ago.
Yeah. No, I don't think we're there yet. I mean, I think it'll be to the point. It's almost the inverse of a crisis, right? You can feel a crisis. Like if you go back in COVID and the market's just tanking day after day, and it's like, it's palpable. And that's what it'll be like with gold and silver. It'll be like your mom starts calling you and asking you about gold and silver.
The same feeling when silver hit 42.
Yeah.
When silver hit 42 in 09, 10, whenever it was.
Yeah. And I'll know it when
11,
I could probably
when
go
all my
back
friends
and tell you the week, because I bought like a week before they changed
the margin
requirement.
Yeah.
So I got caught in
that got manipulated
the
a little
downturn.
bit.
I got caught, it was good.
It got manipulated.
And that stuff is part of, again, that's margin adjustments because people are getting blown up on the short side.
They're
and
that's a
cue.
I was talking about this with my wife the other day about distress. And how important it is to see that stuff coming, because if you don't, and a person is over leveraged, all of a sudden they have to sell their assets.
They get killed,
and they got to take whatever they can get.
But that's part of being a market participant, is figuring out where the stress is, where are the distressed parties, and sometimes it's on the upside.
Yeah.
There are people that are short gold and silver right here, right now, that will get absolutely demolished if it goes skyrocketing. And so understanding that there's margin calls on both sides.
They won't have the ability to be patient.
No.
You can't hold.
Well, they could survive if they'd hedge. But they won't.
They get in such a cash crunch that they can't hold it and hold out for the better price.
They get liquidated.
They get liquidated, and it forces your hand. It's a horrible.
Yeah.
So I've never had a margin call in my life.
I haven't either.
I have. It's not that great. It is not that awesome.
But I've seen people. Known people.
I've seen lots of margin calls because I used to work in the industry. Yeah. So I mean,
they're awful.
I know all about the Reg T margin, the whole bit. I studied all that stuff. But you don't want to be on the wrong side of that. So.
Yeah. So don't be too aggressive with it.
Which brings up an interesting offshoot topic. This government, it's not a big topic, but
let's talk about that. Yeah, I almost closed the show, and we want to talk about
this. The government's just going to move capital. So back when they went off the gold standard, all those different things have happened. Government has, I'll put it in quotations, they have gold. We think it's there.
We're going to audit
or at
Fort
least
Knox.
some people.
We're going to audit Fort Knox.
Yeah.
And if the gold's there, we'll be happy. But if the gold's not there, we're going to be very upset.
We should have put the camera on you when you did that. We missed
actually,
that. That's probably good.
It may not be there, but ultimately, when they had the gold, they basically moved it from, the Treasury to the Fed, got certificates at its current price, which was decades ago. Well, it's still quoted at those current or at those prior prices. So if they move it back from the Fed to the Treasury, they basically get to re-quote it at current prices and so on and so forth. So anyway, make a long story short, it's valued at a lot more money now than it was before. And the same way that us as individuals can borrow against assets we own, right? Collateralized debt. We can have collateral and say, hey, I'll take out a loan against this. Well, the U.S., the discussion, I think, is basically when it's valued at the higher current price, we can borrow against it. Now, that sounds like a recipe for problems because why do we as a government need to borrow more? But that's kind of some of the concept is, hey, we could borrow against it, or maybe is the U.S. government looking to sell their gold? I don't think so.
No.
But there's a lot of
Governments seem
interesting.
To be picking up gold to me.
Get in the car. We're auditing Fort Knox.
Yeah.
No, I think it's an optics play. Because if they can go in and because they did this back, I want to say it was Nixon was president. They audited Fort Knox and they went in and like had video camera crew and they showed the gold and you can kind of see it, and so it's going to be a visual. We have the gold, which gives us a license to
do things against it or utilize it.
I don't know. Back in the 1800s, they called it scurvy, didn't they? What was it called?
Well, that's
Specie.
the disease.
Not scurvy.
Okay.
Scurvy's when you got no vitamin C.
Yeah.
Specie. They called it specie.
I haven't heard that.
Yeah, absolutely. They called gold specie. And what they would do is they would layer some silver on the top of some sandbag and say, "Look what's in my thing." They're going to paint. They're going to go to Home Depot. They're going to go to Home Depot and spray paint.
There's a nationwide shortage of gold coins. Spray paint.
Yeah.
Nationwide shortage of gold spray, and the styrofoam is flying off the shelves.
You got to cover lead. I mean, you got to make it at least feel
have
real.
a little bit of weight to it.
I mean, well, it's just the ones you hold on in the front. The background stuff, that's all spray paint.
Oh yeah,
that's just a stencil.
Like I said, we're auditing Fort Knox.
It's an optics play. Oh my gosh, no! We wouldn't have any good conspiracy around here if Noah wasn't around.
Some people like to call the tinfoil hat, the conspiracy. But I like to call it my crown of alternate knowledge.
Let me tell you, he wears a tinfoil hat to bed at night. You can tell that's what he does.
He doesn't want them checking his thoughts, but I wouldn't be shocked. I'm gonna side with Noah, and I don't usually go on the conspiracy theory, but I'm not sure there's as much gold there as they claim. I would be curious if.
Well, there's two places they have. They got Fort Knox, and they're supposed to have some in New York at the Fed.
Yeah. The underground vault.
The two big places.
I'm quite curious if there's actually what they claim.
And supposedly the GLD ETF is in London somewhere in an undisclosed location underground.
Yeah, and that one is backed by some physical gold that was there at that time.
You actually can redeem for gold. You can do it, but
there's
you have
an
to do
expense and stuff.
Well, it's a basket of like 50,000 ounces, I think.
Yeah, you'd have to be
it's a big
massive.
Basket.
But
50,000 ounces, isn't it?
Yeah.
Something like that.
I would say there's a better chance that the GLD has exactly the amount of gold they say as Fort Knox has exactly the amount.
Well, we'll see.
I could be wrong about that.
We'll see.
Doge is going to audit the Fed, so we're going to see.
We're going to find out.
Goodness. Optics play. All right. Audit the Fed. Sounds good to me. Hey, guys, thanks so much for the discussion. And, really interesting to always talk about gold. It's an important part of what I think everybody has, especially if you worry about the dollar being in trouble.
Yeah.
And I think they will print. I think that we're starting to see, why is gold so high? Well, it's because we've had inflation.
Yeah.
I
think that's pretty safe. It's not like we're making more Rolex watches now.
Yeah,
it's prices.
It's a chicken and egg question.
Prices of everything
did gold go up or did dollars go down?
The dollar went down. All right. You've been listening to Cashflow Academy Podcast. I thank Corey. I thank Noah for being here. Like and subscribe. As always, tell your friends. And most important, take some time today and go to yourinvestingclass.com. Download that free stuff, read it, and just see, out of curiosity, just see after you read if you wouldn't say, wow, if I actually develop some of these habits, my life would change for the better. I think you'll find that to be the truth. So with that, we thank everyone for watching and listening. We'll see you next time.